This is the European edition of Breaking Banks, the world's #1 FinTech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving FinTech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the FinTech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing FinTech plays in the world today. Okay, let's roll.
Hello, listeners. Welcome to Breaking Banks Europe, episode number 58. And today we have our monthly installment news from the FinTech front. And we're going to do this episode a bit differently, given it is the end of a crazy year. Myself and my two guests today will discuss the key and noteworthy news events of 2020 within the FinTech, digital banking, crypto, investment spaces. So, ladies and gentlemen, very excited to announce the two guests for today. We have Effie Pellerinu, FinTech and Blockchain Advisor. Thanks for joining us, Effie.
Thank you for having me.
And we have Kevin Johnson, Innovation Delivery Manager at Euroclear.
Thanks for having me.
Okay, great. So where do we start? I think the most obvious news story that's top of mind for everyone is probably what happened with Wirecard. Effie, keen to get your thoughts on, was this a shock? What are the implications for the FinTech and banking world? Will there be another Wirecard? Please shed some light.
Well, it's a disappointment for all of us in FinTech for all the innovation that we talk about and the change in the culture that we all dreamed of. And all the money that has been poured into FinTech, we really haven't seen that change in culture. And I'm sad, of course, about this, but it is an opportunity also to highlight that we haven't seen a change in the human resources culture in FinTechs. And there are several examples of grown-up FinTechs whose HR practices are not, great examples. They do not shine, so to speak. And here with Wirecard, we have a scandal that, in my opinion, is a classic one in the corporate world. And lately, with some news coming out that at least one of the regulators in Germany was also a shareholder, and all these conflicts of interest, the fact that corporate governance has not changed is something that is sad and needs to change.
Kevin, what are your thoughts on the Wirecard scandal?
Well, I think it's a bit bigger. And Effie, you were talking about the idea that somehow this isn't FinTech's greatest hour. But if you look beyond the initial headline of Wirecard collapsing, you've got some heroic efforts. I did a little bit of digging in this, and I was hoping Daniel was going to be here because one of his portfolio companies, Curve, notified everybody it went down on the 26th of June. 2 days later, they'd done a massive shift of their back end away from Wirecard over the weekend while being incredibly transparent. So I think the sort of culture that you sort of talk about, the reason that people got into FinTech was to better serve their customers. And while the initial scandal, it was terrible and everything you said, there are some shining examples of how you actually deal with the crisis off the back of this. And the key one on that was actually sort of keeping that communication with the customers flowing. On the 26th of June, they were cut off. They were completely dead in the water. They had no access to serve their customers. 2-3 days later, they'd managed to completely shift their back end over to a new system, and they were back up and running, and they'd kept everybody informed along the way. They'd been incredibly transparent. And if you just do a quick Google of Curve and Wirecard, you get a whole 20 or 30 page sort of blog of how they went through all those different steps, what they were telling their customers, reassuring them. Because if you went to a POS with a Curve card, it would just be denied, and you wouldn't know what happened. So I think that was one piece. But then the second piece is we seem to be treating these companies as individual companies. And I think we need to move on to start looking at the financial services sector as an ecosystem. It's rapidly growing, rapidly evolving. And as any ecosystem, there are going to be we've seen it this year, these super spreaders, these really sort of concentrated clusters that people connect into. And if you really want to serve your customers, you need to understand where you're connecting into. So a lot of fintech players were using the services provided by like a Wirecard to do all their payment processing. And when it went down, they were in trouble. I think we need to almost grow up a little bit in this space and go, if we're going to be handling people's lives, handling people's monies, handling people's hopes and dreams, we need to take that responsibility seriously. We need to have plans A and plan B. We need to test plan B. We need to shift this around because it's about managing risk. And some of these players, while they may have done these heroic things, it may also have exposed the fact that we've put all eggs in one basket. So maybe some good can come out of this as well as the bad, which is actually increasing resilience across this space. And maybe this is where that sort of regulatory view can come in to play those key roles in the ecosystem to ensure that there isn't these big concentrations.
Kevin, you brought an excellent point that I think is worthy highlighting for 2020, where we've definitely seen even more growth of all sorts of business models and stacks through APIs, basically, right?
Yep.
Because that is what you're really is saying. And we need to make sure that we have built-in resilience since we are building these stacks and interconnectedness, which serves the customer, whether it's a retail customer or at the B2B level. And actually, I was interviewing Spiros Margaris, and we were chatting the other day, and I brought up the point that this web of APIs concerns me from a cybersecurity risk point of view, but there's also other business risks, and maybe we need more RegTech innovation to be able to build it properly and see, be able to monitor what are the impacts if we have one point of failure at some point.
Yeah, I think you're right. And cybersecurity is one piece. It's this idea that an API is this small piece of code you can plug in and suddenly you're connected. So this monitoring can't just be a one-off exercise and we put it into a book and suddenly we know what the ecosystem looked like. Well, you did literally as soon as you printed it, and as soon as that first page has come out, it's out of date. If there is this kind of view, it needs to be a live view so you can see where it is. And that way, if things get turned off, so these taps get turned off, whether it's data, whether it's payment flows, what are the other sort of routes around it? So yeah, completely. And securing this from a cybersecurity angle, yes, I think this is something that people really do need to take very, very seriously. Completely agree.
And I think, Kevin, you touched upon the point around, this ecosystem and clusters, and, both of you discussed the need for increased regulation. And I think that leads us nicely into, a second huge topic of this year is the explosion of the buy now, pay later space. We have the likes of Affirm, Klarna, a lot of these types of, payment methods being increasingly utilized in the COVID world with people shopping from home. We see buy now, pay later challenging traditional credit cards. Lots of bloggers going after Klarna and different buy now, pay later companies, kind of saying, are these predatory? What are your views on the rise of the buy now, pay later space, either Effie or Kevin?
Well, I have to declare that I'm a dislike of the buy now pay later space. But let me say a little bit more. I mean, it falls into the broader embedded banking sort of umbrella, and I think. Again, here regulation varies by regions. I was reading again today about the Australian sector, which is much more advanced because there's big and small players there, and some of them are publicly listed. So we get more data and information from what they're doing. And there you see that their practices are quite, I would say, predatory, and in some cases they look like payday lenders. And again, it's all about the regulatory or lack of regulatory framework. In the West, in the US and in Europe, it's a different ball game. My question really is, in a year like this, 2020, is this what we needed? Is this what was needed? And if it was, I wouldn't even put it in the top 5 priorities. And users, if we're looking about servicing financial needs, helping people in difficult financial conditions, this is not what is needed to buy a Peloton with your buy now, pay later scheme. Kevin?
I think listening to, as I haven't looked at what's happening in Australia, so that is kind of worrying from the outside. But I started having a look through the Affirm prospectus. And they've just postponed their IPO to next year. But if you dig into it and read between the lines, they're talking about one thing, and it's transparency and trust, which is completely the opposite of what you say you're seeing in Australia. So they're saying that they've made 500 million in the last year. They're nearly doubling in sort of volumes, and people are using it because it's transparent what they can see. So I think the idea of sort of judging whether it's needed or not, okay, yeah, does somebody need a Peloton and need to do buy now, pay later? It's an interesting question. But if there really is a better way to pay these kind of things down, you fully understand what you're getting, why not?
That's the big question. A lot of research is showing, survey-based research, that not even 20% really understand what they're getting in. And then, you have to do the other research. What are these borrowers in terms of their, are they prime borrowers or not? And how much are they putting at risk their overall wellness? Because we all know that we don't have a super app in the West, so there's no way for the buy now, pay later provider to really look at the financial picture of an end user and advise with some fiduciary duties, so to speak.
Which is very, very true. And there was an interesting thing that probably slipped a bit under the radar. So I used to work at Swift, and while I was there, they launched a buy now, pay later API for the industry. So I think it was developed in partnership with Citibank. And over the summer, I think it was about August, Citi partnered with Amazon, so that now if you're a Citibank customer, you can actually do a buy now, pay later loan with Citi. So that kind of ties into the actually knowing your customer better and being able to offer the right products. And if you just look, some of the APRs, so I did a quick look, it's about 8% is what they're offering for a really high purchase thing from a Citi loan. Klarna was talking 20%.
Sure.
So and there's sort of no credit checks on the Klarna side, but you kind of hope that if you're getting offered a buy now, pay later loan as a Citi customer, as they know you, they've actually done some of that background. They're offering you something you can afford. So yeah, affordability, and not just the can I pay this, but it's that whole, can I actually afford to pay this? And what is that actually going to do? I think, yes, that does need to be in there. But I think the industry has got a way that they can get into this space, and maybe the angle of actually becoming more around how you manage that sort of overall piece, rather than just here's some money so you can go buy your latest new shiny thing. might be a better way to sort of take this, because otherwise you do end up risking creating more small micro pockets of subprime everywhere that who knows what's going to happen to it.
I mean, I must say that I feel for regulators that can't keep up with all these innovations that keep, growing like mushrooms. Because essentially, if you think of it, there's an idea that finds a regulatory loophole, and they launch it, and if it scales, that like the buy now pay later one, then the regulators have to step in because it's large enough, and they have to look into how it should be regulated. And we have many examples of those.
So we talked about, is the buy now, pay later solution truly good for customers in terms of helping their finances, putting them on the right track? I think another area that we've really seen take off this year is kind of the Robinhood effect, and the democratization of investment, and these investment apps. Effie, what are your views on the Robinhood effect?
Well, I should have highlighted that last year in my year-end piece and sort of predictions that I wrote, Robinhood had been in that pack because of disclosure requirements in the US. They had to show how they're making money by selling order flow, and the fact that they were not transparent about their business model, and they let everybody believe that they're making money on margin accounts, on the interest on the margin accounts, whereas really they have been selling order flows to the citadels of the world. They have the most explosive growth in that area compared to any other traditional player that engages in that business. And the worst part of it is, if you look at the numbers, and Alphacution Research does a good job of really following that, they show that most juice of revenues comes from option trading, from selling order flow. And that, for me, is not okay. Democratization, commission-free stock trading has really cannibalized the whole sector. And the result of that is what? More concentration of power, because all these brokers and asset managers have to consolidate. So I don't know what good is all this, for who this is good.
Yeah. Kevin, what are your thoughts on Robinhood?
This isn't actually a space that I've really looked into, to be honest. I know I did a little quick bit of looking earlier, and on the democratization side, everybody's saying, well, these day traders, or these sort of democratized access to this, the millennials that are playing the markets now, are beating the professionals. And they're doing it because what they're doing is they're just following the traditional advice. They're buying when things go down, and they're not fighting what the Fed's doing. And it seems they're almost taking things back to principles that maybe some of the more traditional established players could learn from, as opposed to trying to sort of do something fancy. But I'm listening with fascination to your sort of forensic almost dissection of this sort of space. I'm sort of looking at this from, actually, this doesn't sound like a bad point of view. And you're really digging to the heart of this, Effie, of where this is possibly a bigger problem than just a few people at the end of this seem to be beating the market.
Yeah, I mean, for me, it's taking a freemium business model and not being transparent about how you make money is just not okay. And going against the establishment for the sake of retail trading, again, it's just not okay. And I think that it's not a sustainable business model in itself. However, if they have enough VC money to grow and grow a fuller stack, then they will.
Is it really winning? when you're just burning through somebody else's money to do this?
Well, we'll see. They're pre-IPO. Let's see what these capital markets say.
Okay, so the last topic we'll touch upon before the break, an exciting one if you know this space and got into this space early enough or in the right way. The Bitcoin halving, the all-time highs of Bitcoin, the explosion of the DeFi scene. We've just saw that Coinbase will be IPOing. Lots of interesting things happening in this space. Kevin, what are your thoughts on the rise of crypto in 2020?
So this is one I have been watching from afar. With what I used to do with Swift, working with InnoTribe, we got into understanding Bitcoin and blockchain fairly early on. We sort of looked at this as a way for the industry to sort of look at. But I've always wondered how it's working underneath. So as it was sort of going up to the 20,000s at the end of 2018, you have friends and family going, should I get into this? And you just go and go, I don't know why one day it's up 2,500, the next day it's down. It's something that intrigues me, fascinates me, but at the same time scares the hell out of me. So I've kind of been looking at this from a very long way away going, there's something here. I remember 4 or 5 years ago looking at this sort of space where everybody was trying to eulogize about solutions, going, blockchain's the answer, blockchain's the answer. I think I got up on stage and said, well, if blockchain's the answer, what's the question you're answering with this answer? And there's a few coming out now, but I still think that sort of proposition is there. And then you've got all sort of things coming off the back of this. It's a fascinating space. It's just not one that I've got my finger on, but I have a horrible feeling that Effie is going to give me a very big lesson on this one right now.
I think you found the right person on this one. I mean, I agree with you, Kevin, about, blockchain as a solution for everything and not knowing, what the question is. We definitely went through that period for quite a while, which, by the way, shows that I think subconsciously we have a lot of issues and problems that are probably societal and moral, and because we've codified technology in general, we try to find these technologies that will solve our problems. So I think blockchain falls in that, human societal need. But having said that, I think there's two parts that are worthwhile exploring. One is Bitcoin as a cryptocurrency, and whatever, we can be talking hours, whether it's a store of value, a unit of account, blah, 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 and so on. But I think there, one has to get a wallet and has to own a cryptocurrency, and Bitcoin is a good start, because that is the only way to start really understanding the notion of, okay, this is a wallet. It's not like my Apple wallet or whatever other wallet, because it holds an asset. And that is a major innovation. It introduces us to the self-sovereignty, which might one day become a very important part of how we operate in business and in life, and how we trade things. So I think we're going there. So in my opinion, 2021 will be the year that we will really see explosive adoption, start of mass adoption in terms of wallets. Millions of people will actually have wallets. Today, I think we're around maybe 40 million, maybe 50 million. These are estimates, right? But we will have much more. Let's thank Mark Zuckerberg for Libra, 2019, and it doesn't matter if it never happens, but that's how it all really started. Thank you very much to Square. Thank you very much to PayPal. to Coinbase, to whoever, right? So I think that we are going there. What will happen, the story that Bitcoin is the digital gold is the way the market wants to see it right now. It doesn't mean that that is the story, the truth, or where it will end up. And then in addition to that, there's definitely a lot of potential in the distributed ledger technology. And for me, the potential is to change governance, really. And that is where DeFi is exciting. Because we live in a world right now where we can own shares, financial, assets and so on, but really we do not participate. We are very passive in that participation. If I own, be it Microsoft or Tesla shares or whatever, yes, I can vote maybe, but really I'm not participating. The ownership and governance participation and the experimentation that's going on in the decentralized space is very important. Another aspect that is extremely important is in capital markets and asset management, where the way we produce, we manufacture the loans, everything that we know, deposits and so on, is changing. That is changing. And we can have a long discussion. It's unregulated, and it will be, regulated, and it won't be in the form. But because it is unregulated, we are having true innovation, true experimentation, let's call it. And who knows what will come out of it, but definitely there's innovation there. So I'm very excited about that space, by the way.
Yeah, great.
I can tell.
Okay, perfect. So wrapping up the first half on a quite optimistic note on the future of Bitcoin, cryptocurrency, and DeFi. So with that, we'll take a short break and be back with you soon.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK FinTech scene. Reach out on Instagram, www.provoke.fm.
Welcome back to episode 58 of Breaking Banks Europe, news from the FinTech front, where we are discussing the breakthrough and key stories of the year that is 2020. So we're going to kick off the second part of the podcast, focusing a bit more on some of the big stories from banks. And we'll start off with what's been happening in the neobank space. And I think the big story coming out here is Starling Bank in the UK. So the second neobank to go into profitability. And I think exciting times for the folks over at Starling. But also I've seen a few articles, specifically one coming out of Sifted, showing that the majority of consumers in the UK think that neobanks will be dead in a year. So, Kevin, what are your thoughts on Starling, and what are your views for the year that neobanks have had?
So I think Starling is a success story for some of the right reasons. So if you read a lot of the sort of mainstream fintech press, you'll hear lots about Revolut, you'll hear lots about Monzo, you'll probably hear a little bit less about N26 these days, but you don't really hear much about Starling. Anne and the team there have got down and they've focused on what actually matters. So with the COVID situation, they sort of got involved in the provisioning of the loans, but they've not focused on growth at all costs. They've not sort of offered flashy discounts at people. I don't think they're offering metal cards like some people are. They seem to be looking at this from a fundamental different approach. They seem to be trying to build a business that's going to make money, and I'm delighted that Anne and the team have managed to do this. So I've been following them for quite a while. And they seem to be taking an approach of build and collaborate and partner. So if you look at their marketplace, they're bringing sort of expertise they haven't got in, but are making it available to their consumers. And that sort of model of collaboration is something that I've been a huge fan of for quite a while. And I've sat quite on the sort of large side of the industry while sort of dipping my toes into the fintech space. And I think the industry has this ability to be the sort of solid, the trust, the scale, the 500-pound gorilla in the room. But then you kind of target and collaborate that with the smaller players. It means you can do some amazing things. So the idea of a neobank making money, as opposed to just making more and more sort of customers on there and burning through more and more VC money and becoming this unicorn or decacorn or whatever you want to call it, it's great if you're investing in them. But I think as a consumer, you want a more sort of solid, sort of traditional business model. As for them disappearing, I think if you look at the traditional industry and compare that to neobanks, when sitting inside that industry, one of the things you look at is actually how much does it cost to operate per customer. And if your acquisition cost, your customer sort of running costs for the year can be driven really down low, whether that's through modernized technology bases or whatever it is, if you've got a low operating cost, then you've always got the chance to survive. And I think the neobanks that are out there that are going to do well are the ones that have got that technology platform that's there, that's solid, that to add another 100,000, 200,000 customers doesn't cost an extra 200 million. So if you're running a neobank and it costs you 200 to 500 euros to acquire and service a customer for a year, then I think you need to really think about what you're doing. Whereas if you're in the 10 to 50 sort of range, you are going to be looking pretty for the next couple of years coming.
Great points, Kevin. I mean, I unfortunately can't be a customer of Starling. So what I know, I don't know them from personal experience. I do admire Anne Bodden, and from what I read and follow, I would highlight what you said, that they have chosen to grow with this marketplace.
Yep.
What comes to mind is the fact that if you can lower your operating costs, what you said, it's huge. And what comes to mind in that line is from the East, WeBank is one of the banks that has basically built their business on open source technology. I think that if I were to devote the time and look into the Western ones here in Europe, I would look to see which ones have really used open source technology and technology that they could white label and share and are building on really an open banking ecosystem. And I don't think that, for example, Revolut is doing that. So
I think Revolut is partnering with some people to do bits they can't do.
Exactly.
But I don't know how their stack has come about. But I remember a story, must be 12, 15 months ago, where Starling were actually looking at building neobanks for major players. So that idea of taking their technology stack as a technology division, I think that's happening with some of these people.
Yes.
I don't know if that's a significant form of revenue for them, but I think they've just focused on doing the basics well, keeping their customers in mind, the speed that they can get things to market with this whole idea of a platform-based bank approach as opposed to a big monolithic institution that you have to add things to in a 6 to 12 month cycle is something that I think a lot of the industry players should be looking at. That how you don't have to build everything. How you can create a platform that can be accessible by APIs, you can add the cybersecurity layer, the trust on top of it, but then create an open end where somebody can come and innovate on top. They can make money, you can make money, and your customers can be happy. And I think that is the future of banking. And I think Starling are a sort of demonstrating this can be done and it can be profitable as well.
Kevin, you shared beforehand a story with us coming out of Citizens Bank of Edmond, kind of a lesser known news story, but I think, shed some light on some of the really great initiatives from the more traditional bank in terms of how they've been handling the pandemic. So if you could, share that story, that'd be super.
Yeah, well, so there's a lady, there's the CEO of Citizens Bank in Edmond called Jill Castilla. And if I've murdered your surname, I apologize. But when the US passed their COVID support bills, they were essentially giving a $1,200 check to all of their citizens to help them. The problem was, and I think it was Mark Cuban that sort of first recognized this, it was going to take weeks, if not more, for people to get their hands on this. So he put sort of out a message saying, are there any sort of regulated banks who are prepared to work with me to try and get this to happen? One of Jill's network saw this, and this is a tiny bank. It's got one operation in the middle of America. She partnered with Mark Cuban and was able in 2 days for a traditional bank to allow people to have essentially an overdraft facility against this $1,200 check so they could access the funds straight away. And then she didn't just keep that going, this is a competitive advantage. She went, no, this is something people need. There are now about 400 or 500 banks that are using the same sort of idea in the technology. And then she didn't go, okay, that's enough, I'm done, I've done my bit. Then the next wave of loans came out for the small businesses, and she again partnered with Mark and a software development company called Tesla, and they built a PPP solution that allowed people to better fill out the really complex forms that were needed and got that from the ground running in 10 days. So this is a traditional bank, probably very, very conservative, who's taken their customers' needs to heart, and a real sort of example of customer centricity in times of crisis and really shown great leadership. And over the past couple of weeks, she's actually been named Executive of the Year by a US banking site. And it's really great to see that some of these stories that may not be sort of that sort of big in sort of what we're looking at over here in Europe, because we're very focused on different things. I think we need to celebrate the fact that there are a lot of good people in this industry really focusing on customers' needs, understanding what they are, and then not just talking about it, but rolling their hands up and getting it done in banking terms at light speed. And even for a fintech to get a fully sort of working sort of system up and running in a couple of days is pretty impressive. So if you think that's a small sort of citizens bank in the middle of the US, I think it really should be celebrated a bit more. She's really, it brought a smile to my face to hear that this was happening. And she wasn't doing it for the plaudits. She was really doing it because her customers needed it.
Yeah, it's a super fantastic story. And I know that, Barclays made some really good and quick adjustments with their customers on the mortgage side of things. Effie, what's your view on kind of how incumbents have come through the pandemic? Do you think they've been able to outshine the neobanks in terms of their, quickness and supporting customers and, other types of initiatives?
Well, I mean, from the US, it seems that there has been concrete evidence that they did pretty well in terms of creating trust and being there in the best way they could during these difficult times. So, in a way, what happened was, some of the figures that I have seen is that you would expect that these $1,200 checks would have gone by a large percent to neobanks in the US, and they didn't really. The biggest percentage went to the big banks because there was also, I guess, maybe the fear of failure during these crisis, so people didn't have that much appetite for. They were more risk averse, but that's really what happened.
Thanks for that. And the next story, kind of moving staying in the US a bit, but then moving over to China. So a big story, the clampdown of TechFin, and specifically what's happened with the Ant IPO and Facebook. Effie, keen to hear your thoughts on this trend. Is it a trend? Will we see more of this in 2021, or?
We'll definitely see more from Asia. More regulatory clampdown, more sort of showing that they're ready to develop their regulatory framework that will not allow these huge tech fins to create, if you want, systematic risk in the region. And we already see that these tech fins are saying that, yes, we will collaborate, yes, we will do whatever it takes. We do have to take into account that this is all happening at the time that the central bank digital currency of China is being launched as we speak, the DCEP, which obviously is a competitor, if you want, to these tech fins that are in the payment space, that have enabled the growth in the e-commerce space. So, of course, they want to be part of this. They want to find ways to integrate this stablecoin. So I think that we will be seeing more along those lines. And, in Europe, obviously, we're seeing regulatory clampdown on the big tech firms, Facebook and Google, right, with all the antitrust actions. Here, we have Libra rebranding to Diem. Diem, yeah. I never took Latin in school, right? I must admit. So we are going in that direction in terms of TechFin and tech. And of course, the US is a totally different story in that respect.
I think at the end, it's a DM. I think, it's Carpe Diem, so seize the day. So I think they obviously moved away from Libra because it was too associated with Facebook, and I think people were calling it the Facebook coin. From what I'm reading of DM, Facebook are one of the 27 or so members of this new consortium, but it sounds like it's the Facebook coin with a little bit more respectability on the top of it. So it's going to be interesting to see how that works. I still sort of have questions about whether this is the right thing for them to do, and whether it's actually going to be able to, the regulators are going to be able to do this, because there's talk of this launching in January, which isn't that far away. So by the time that this goes out, it'll be a couple of days till the 2021. And for regulators to allow this kind of thing to happen is going to be interesting. But I think one of the areas that you talked about wallets earlier on before the break, we're now talking about this idea of millions of people having these wallets with money in online. And it comes back to cybersecurity. Are we actually pushing cybersecurity to our end users without supporting them? Are we really sort of running before we can walk? And I think there needs to be a much bigger sort of focus on the cybersecurity side of this, because right now, if I've got online banking and I'm hacked, I'm going to phone my bank up, and it's going to be a difficult conversation, but there's a pretty good chance they're going to sort of work with me, and we're going to figure this one out. If I'm responsible for looking after it and I lose it, I don't necessarily have that kind of recourse. So without the sort of knowledge and education around this, I'm worried that these kind of things are coming up. And I think that might be an area that these type of consortiums could play a much bigger role in. If you look at a Facebook or a Google, they've got hundreds, thousands of security engineers on staff. So their side is going to be secure. Just need to make sure the other side of this is as well. And then you also talked about regulation in China. And I think this started last year, the year before, where you got things like Yubao, which started making money off the float. And then over time, they were told, no, you can't invest the money that people have got holding with you. So at first, the capital holding requirements were like you had to have at least 25% of this capital ring-fenced. Then that went to 50, and now that's like up to 100%. So the idea of the regulators now in 2020 and going into 2021 coming in, they've been doing this for a while. They are looking at this space. And I think it's kind of critical to realize that this isn't a 2020 story. It's potentially got its roots back a couple of years. So it's going to be interesting to see how and when this plays out in 21. The Ant IPO is massive. If and when it happens, I think it's going to be the largest ever. And from what I understand, it's back on the cards. So I'm not sure that it got that derailed by the regulator stepping in. I'd be interested to see what you think about what's been happening behind the scenes.
I'm not sure that there's going to be a breakup of Ant because of regulatory restrictions. I just think that it will take them a few months to reassure the regulators that they are doing the right things. So I also think that the IPO will happen. Well, let's see who else is affected more. Maybe Tencent is affected more than others. If we take into consideration the international expansion plans that these companies had and have, that is where it will be interesting to see what really happens. Tencent specifically, I like to look at the multiple and huge investments that they have done in fintech internationally, in diverse tech companies, but always around fintech. I think they have the largest portfolio globally. And what will this clampdown mean for them? And here is where, again, politics and the geopolitical issues matter a lot, because we continue to see tensions in capital markets between the US and China. We have the risks of delisting in the US, and at the same time, if we look at figures 2020, now they're coming out and saying how many Chinese companies IPO'd in the US. That's huge, and it's business. So all this is interconnected.
Thank you.
Thanks for sharing your insights and thoughts. So yeah, to wrap up, I wanted to ask the both of you, what story or development of this year gives you the most hope going into 2021?
I mean, for me, the big overarching story is the resilience of the entire system despite these challenging circumstances. Let's applaud that. Let's celebrate the people, as Kevin said. I mean, think of it. How many people have really put their energy in this year to make sure that we are where we are today? We are safe. I'm talking, the financial system. So, I think that we need to celebrate that. And it's a collaborative effort. It's got, the incumbents, it's got the fintechs, it's got the regulators, all the ecosystem together. And, we have come fairly unscratched out of all this, and we continue to have serious macro challenges. So for me, that is a celebration. Let's pat ourselves on the back, and meaning the whole system.
I'm going to take a slightly different take, but kind of building on what you said. And to me, it's got nothing to do with the technology or the system. It's really the people. And it's not just the people in finance, it's the doctors, it's the nurses, it's the community workers, it's the police. People have stepped up so far beyond any expectations of them. They've shown, you used the word resilience, they've shown that resilience. They've found superhuman feats of courage and endurance to really make this year bearable. They've allowed people to carry on with their lives. And I think one of the real sort of shining things that's come out is this idea of a community spirit. I was interviewed very first sort of down in the lockdown, and people were talking about this. And they said, or I think I said, one of the first things that you ever see in a horror movie, and it kind of looked like 2020 was going that way, the empty streets, it felt a bit like 28 Days Later. When are the zombies coming? It was a collapse of society. Whereas it almost seemed like the reverse of this. People came together. In the UK, my sister was volunteering to go out, buy food and medicines for people around her, get them delivered in there. And this was been repeated in community after community across the UK. The doctors and nurses were putting their lives on the line, on the front line, to fight this thing that we had no idea how to fight, no idea how it was spread at the beginning, but we knew we had to do something. And humanity stood up and almost sort of said, no, this will not pass. We're going to do this. And the sort of shining light at the end of all of that human ingenuity and collaboration is the vaccines that are coming out of this. Everybody has collaborated. We've kind of bought ourselves the time for this to happen. And I truly believe that 2021, if we can take the good of coming together as a community and what we can do together, I think that's going to be such a strong legacy. Not the economic impact, which is going to be massive. It's decimated people's lives, but people are incredibly resilient and they will help each other get up. If, as we start getting back into that normal, we cannot forget that piece and we can actually bring everybody along with us, I think 2021 could be a very good year.
Cool.
I'd like to add to that I think, for us in the middle stage of our life, this is a unique lifetime experience where we all have this coming together under a common issue, and it has really brought us to be really more human, more conscious, more aware, and we are. I feel it in my personal work. It is more human, more authentic, more understanding.
Yep, completely.
Okay, so on those positive notes, we've just wrapped up the last Breaking Banks Europe episode of 2020. So thank you again to my guests, Effie and Kevin, and thank you to all of our listeners for sticking with us and supporting us over 2020. Thank you, everyone.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.